as our canola farmers know all too well. They were in some ways my fellow hostages the last time Canada had a dispute with China. And so the risk in managing business with China is to make sure that no particular sector or company becomes so dependent on the Chinese market that the Chinese government can then use that and target that sector or company to apply political pressure to try to change Canadian policies. That's the danger. It's that the Chinese Communist Party routinely weaponizes trade and interdependence to exert geopolitical influence.
How about tapping into other Asian markets such as Japan, South Korea, and Indonesia?
Absolutely. That's what the Indo-Pacific strategy is really all about. Incentivizing Canadian businesses and making it easier for them, putting more resources, which look, the taxpayers provide money to the government. The government has choices about which countries it facilitates more and puts more resources into helping Canadian businesses do trade and investment. So the Indo-Pacific strategy is an effort in many ways to make Canadian businesses more aware of opportunities in the Indo-Pacific, Japan, India, Indonesia, other parts of Southeast Asia, South Korea, that the Pacific and that Asia is not just China. There are many other opportunities. And while it requires extra work for businesses to get familiar with those markets, at the end of the day, many of them, they don't have the same political challenges that China does. There isn't this the stark difference in values and political systems necessarily, but more importantly, they're not great powers, and so they're not likely to be throwing their weight around politically and trying to bully Canada. And so in many ways, they're safer and more reliable partners. And so that really needs to be a key part of Mark Carney's diversification strategy, prioritizing relations with Japan, with South Korea, with Southeast Asia, and diversifying across what is really still the most economically dynamic and growing region in the world in the 21st century.
There you have it, guys. Very interesting take. Today is Tuesday, January 20th. My name is Miloš Krajčnik. This is Canuck News. Have a very interesting article kind of tying into everything that we've been talking about lately. But we've been seeing it, guys. Canada says it has a new auto strategy. These foreign automakers are going to get preferential access to the Canadian market if they build the vehicles here. Wow. Guys, and obviously on paper that sounds like leverage. It sounds like Mark Carney's doing something great. It sounds like Canada's setting terms. He sounds like a badass. He sounds like the leader that we need, right? But when you really strip this down to how auto manufacturing actually works, this policy is not about control at all, right? It's really about what happens when a country realizes it no longer holds the leverage it used to. And it tries to compensate with language, with political posturing. And this is what Canadian politicians are great at, just a lot of posturing. And this is what the article actually tells us. According to senior government officials, Ottawa actually plans to introduce a new auto policy in February that rewards foreign automakers who build vehicles in Canada with better access to the domestic market. At the same time, though, Canada just cut tariffs on Chinese-made electric vehicles from 100% to 6.1% for the first 50,000 imports. Guys, the government argues that this move could lead to foreign auto investment in Canada within 3 years. But the same official also makes a crucial admission. Vehicles assembled in Canada may no longer be able to rely on access to the U.S. market because we haven't solved our USMCA trade deal with the US. That one sentence in the article actually quietly undermines the entire strategy that the government is pushing. And I want to go into the article real quick with you guys, just so you guys can see this for yourself. He goes, Canada is planning to reserve preferential access to its domestic auto market for foreign companies who build vehicles in this country under a new auto policy to be released in February, a senior Canadian official said. Okay, the official also said Canada gave advance notice to the United States of its January 16th decision to part with Washington and slash tariffs on Chinese-made EVs that were imposed in tandem with the Americans in 2024. So this is hilarious in and of itself, right? So the U.S. is pushing for allies to be tough on China because the U.S. is trying to keep Chinese dominance in check. And now you have the Canadian government going around and doing its own things. Really? You don't think that this is going to backfire somehow on Canada? The US isn't going to retaliate to this in some form or manner. Like, we've seen this happen already. with Chinese companies. Yay, you told the Americans on January 16th that you're not going to be following suit with them anymore. Okay, cool. Under Ottawa's new auto policy, foreign companies that make cars in Canada will have more favorable access to the Canadian market than those that choose to import cars assembled outside the country, the official said. The Canadian government is scrambling to preserve and grow Canada's 125,000 job auto sector as automakers adjust to the protectionist policies of U.S. President Donald Trump, who has imposed tariffs on foreign-made vehicles and said the U.S. does not need cars made in Canada. The Canadian government's plan to protect the Canadian auto industry is to import 50,000 vehicles. That's basically what they just said. We're gonna grow our auto industry by importing 50,000 Chinese EVs. Do you guys see the contradiction that's happening in this policy already? The two things, they don't go hand in hand. And as I do believe we need to protect the auto industry, but we need to protect the auto industry as well as Canada at the same time. So what's the best way of doing that? Like, all we do is complain about Trump's tariffs, but I haven't seen Carney actually talk to Trump about the tariffs since he's been in office. The guy has literally never talked to Trump about the tariffs. Why hasn't he talked to Trump about the tariffs? So it goes, if foreign automakers refuse to build their cars in Canada, then their access to the Canadian market will come on less favorable terms, the official said. They did not detail how this would be accomplished, but tariffs or restrictions are examples of such. So Canada is now trying to pull something similar to what the U.S. has been trying to do. Oh, if you're not manufacturing your cars in Canada, a country of barely 40 million people, you're not going to be able to sell your cars in Canada. We're going to tariff you. Okay, so it's not enough that Canada is taxing the hell out of its own citizens. Let's tax automakers, right? Let's just make cars more expensive for Canadians, right? Because we're just going to tax everything, essentially. That's basically what they're saying. We're just going to put a levy on all of these imports if you're not manufacturing in Canada. But a population of 40 million people, that's not a market that you base serious manufacturing from. You base serious manufacturing from a market of 400 million people, like the US, right? With high-paying jobs, right? That's exactly it. It goes, the first step in a new approach to auto policy came Friday when Prime Minister Mark Carney struck a deal with China to cut Canadian tariffs on Chinese-made electric vehicles. The government, through Canada's ambassador to the U.S., informed U.S. Trade Representative Jameson Greer ahead of Friday's announcement in Beijing that Mr. Carney was lowering levies on Chinese EVs from a 100 to 6.1% on the first 50,000 vehicles imported. Mark Carney said Canada expects the deal with China will lead within 3 years to Chinese investment in this country's auto sector. Industry Minister Mélanie Joly was one of 4 cabinet ministers who accompanied Mark Carney to China earlier this week, and during the visit, she met with Chinese EV automakers BYD and Chery, her office said. Speaking to reporters as Mr. Carney flew to Qatar from Beijing Saturday, the official said, in short term, it's expected most of the Chinese EVs coming in under the new lower tariff rules will be from Western-owned factories in China, including Tesla. Over time, however, they expect homegrown Chinese automakers to come in. So we're not going to buy Teslas from the U.S., guys. We're not going to buy Teslas from the U.S. Let's bring them in from China. Let's put them all on a boat and have them cross an ocean and then have them shipped from BC to Eastern Canada, because that is so much more efficient than putting them on a train and sending the Teslas to, throughout Canada. Guys, all this spells out is that prices are going to keep increasing on the price of vehicles in Canada, while we're not actually fixing the economy. At the core of Canada's new auto strategy will be electric vehicle production in Canada. The official said Canada wants to entice Chinese, Korean, or German automakers to commence and grow auto sector production in Canada. They said this plan is inspired by Ottawa's success in the 1980s at attracting Japanese auto factories to Canada from companies such as Honda and Toyota. Today, 70% of auto assembly in Canada is Japanese. So this is interesting because, for a number of reasons, Japan came so that they could sell into the US so that they could sell into Mexico as well. Mexico is a big market. Obviously not the spending power, but it's a massive market. Chinese automakers, sure, maybe they'd come, but everybody would want to come so that they could sell into the US. The Chinese had already a plan to build the largest electric vehicle factory in the world in Mexico on the border with the US. That factory closed. That factory stopped being built. It was never finished because the US put massive tariffs on that factory. That's the first thing. So why would the Chinese just come to Canada to, supply a population of 40 million people with a factory? That's not how that works. That's number one. Number two, Germany already has, VW already has a pretty big factory in Mexico. Why would they want to build another factory in Canada? First of all. Second of all, they're going through some serious issues in Europe because manufacturing in Europe has just become untenable. It's too expensive to manufacture cars in Germany right now. They just literally closed down an auto plant in Dresden that employed 16,000 employees. And they're asking VW to come. This article doesn't specifically state VW, but an earlier episode that we did actually covered it. They're actually asking VW to come. And it goes, and this part gets even better. It goes, the official acknowledged a potential shuttering of access to the US auto market means that any vehicle assembly in Canada can't rely on shipping cars south of the Canada-US border. They said they expect foreign automakers would envision on assembling vehicles in Canada for other overseas markets as well, including possibly the Middle East. This is so stupid, honestly. And right here at the bottom it says, they said Ottawa intends to enforce beneficial conditions before approving foreign auto assembly investments in Canada, including commitments on size of investment, possible use of unionized workforce, whether Canadians would control the intellectual property, and how domestic technology would incorporate into plants. Guys, this is all so ridiculous that I can't even start to explain to you how unimpressed I am by all of this. For this to function as leverage, Canada would need to control meaningful barriers to entry, enforceable penalties, and long-term policy durability. Canada does not fully control any of these. Auto trade operates inside multilateral trade rules, existing treaty obligations, and the cost at risk of retaliation from the United States. Even if Ottawa designs a mechanism, automakers will discount it if it can be legally challenged, if it can reverse politically, or if it provokes U.S. retaliation on Canada that Canada cannot counter. So OEMs, manufacturers, do not respond to stated intent. They respond to enforceable power. They want to know that their investment's going to be safe, that they're going to be able to plan their profits over the next 20 to 30 years. And then when a government signals preference without demonstrating control over any outcomes, that signal is priced as political noise, not industrial leverage, guys. This is where the policy logic really breaks down completely, guys, because Canada cut tariffs on Chinese EVs and framed it as step one of an industrial strategy. That reverses how leverage works. Industrial leverage follows strict sequences, guys. You restrict access first, you negotiate commitments second, and then you open the market last and conditionally. Canada literally did the opposite. By lowering tariffs immediately, they're allowing cheaper vehicles to enter the market. Domestic price expectations are going to reset. So the Chinese cars are going to be cheap. Consumers are going to adapt to lower costs, and political resistance to reversing course is going to grow. So once imports are normalized, leverage is going to disappear. And at that point, Canada is no longer negotiating from strength. It is negotiating from dependency. So all future promises of investment do not restore leverage that has already been surrendered. Why would they want to build a factory? Everything gets brought back to the USMCA because this is the most important structural issue in the article. Canada's auto sector was never built for Canada alone. Plants were designed around volume, and volume came from the US market. Scale matters because per unit costs fall with volume. Supplier ecosystems depend on throughput, and capital recovery depends on steady, high utilization. And once access to the US market becomes uncertain, Canada stops being a scale platform and becomes a niche market. And then this article specifically gestures towards alternatives, domestic demand, overseas exports, distant markets. Do you know how ridiculous it is to ship vehicles made in Canada to the Middle East? It's the same distance as China shipping the cars themselves to the Middle East from China. Why would they do it from Canada? For one. Second of all, why wouldn't they, if they're already going to be looking to open a factory somewhere to supply the Middle East, they would probably go with Turkey. Turkey already has an auto industry. They already have some manufacturing know-how in the auto industry, and they're right beside Europe. So you can basically kill two birds with one stone, right? You can supply Europe with vehicles and you can supply the Middle East as well. But no, let's entice them to build vehicles in Canada, and then we might be able to get a slice of the pie in the Middle East. That is so stupid. It is actually not thought through. None of these things above can actually replace the US volume. Canada buys roughly 1.8 million vehicles a year. That's not enough to anchor multiple large-scale OEM investments without export certainty, guys. The US buys literally 10 times more. So without scale, manufacturing becomes fragile. Fragile plans do not attract long-term capital. They attract conditional, reversible investment at best. So to compensate for all of these weaknesses, the government leans heavily on conditions, guys. Approval conditions around investment size, unionization, domestic technology, IP control, security safeguards, right? And all of this sounds amazing. It sounds forceful, right? But it exposes the real problem. Countries that successfully shape industrial outcomes do not rely on conditions alone. They co-invest, they anchor their financing, they control infrastructure, and they make exit economically painful. And Canada is trying to govern outcomes purely through approvals while simultaneously opening its market and weakening its bargaining position. And the conditions without capital backing are unenforceable over time. What leverage will we have on China? None. They only work when the country imposing them actually holds structural leverage. Right now, Canada does not. And so why all of this matters to Canadians is because this is not about trade ideology, guys. It's about whether Canada understands the mechanics of industrial power. The article describes a government trying to keep auto jobs, attract foreign capital, avoid US retaliation, manage security risk, and open the market at the same time. Those goals conflict, guys. And when the government attempts to satisfy all of them simultaneously, they usually end up ceding control rather than gaining it. And to close it all off, guys, this policy is not bold. It's compensatory. It uses language where leverage used to exist. It opens the market before securing commitments. And it assumes manufacturers will absorb risks Canada itself cannot manage. So preferential access, guys, without control is not leverage. Conditions without capital are not sovereignty. And industrial policy without scale is not industrial policy at all. So Canada is not setting terms here, guys. It is literally just adjusting to a loss of power and hoping their rhetoric can fill the gap. So the real question is not whether this policy sounds tough. The question is whether it changes who actually holds leverage in the auto industry. And right now, it doesn't. That's all I have for you guys today. Hope you liked today's episode. Please drop some comments in the comments section below. Like, share, and subscribe. Stay curious, stay informed, and God bless Canada.